What is DIMEE? Do you know what DIMEE is?
DIMEE. What is it, Troy? I've not actually heard that term before.
Help. A lot of new agents need to know what type of coverage and how much coverage the client needs. So DIMEE is really an acronym that stands for debt, income, mortgage, monthly expenses, and final expenses.
Okay, Troy. So that's interesting. I think that gets our arms around what the need for coverage is from a financial aspect. Can we go through like an example? Like maybe
Sure, let's do it right now.
Okay.
So if you're the client and agents watching, remember DIMEE, DIMEE kind of gives you a plan to have the conversation. So, Paul, if you could write a check right now to eliminate all your debt except for your mortgage, what would that check be? How much would that be?
I'm gonna say that on average, Troy, that's $500,000.
That's a lot to write one check and pay off all your debt.
Absolutely.
And then for the average person, pretend you're an average client. What's your yearly income?
I'd say most clients that advisors out there are talking to today, they're usually in the $100 to $150,000. So let's say 125.
125. And then what's the balance on your mortgage right now?
For most people, I'd say that's probably in the $250,000 to $300,000 range.
Okay. And then if you could sum up all of your monthly expenses, so your haircut, all your Netflix, your Hulu subscriptions, your groceries, your gas, your insurance, your utility bills, everything, how much would that be on a month, would you say?
Probably $6,000 to $7,000.
Okay, 7,000. And then another thing the agents can ask the client is, have you thought about what's going to happen to you when you die? Are you thinking of more of a traditional funeral or a cremation?
Well, I would say the average person out there should plan on helping their clients have at least $15,000 of a final expense coverage to be able to take care of the funeral and all the ancillary expenses that go along with it.
So as you walk through DIMEE with your client, you're really looking to see how much debt they have, what's their income, what's their mortgage balance, their monthly expenses, and their final expenses. And what we're going to do is we're going to add all these numbers up. But I would turn around and ask the client and say, Paul, if something happened to you, how long would you want your wife to have the income that you're currently making? How many years?
Yeah, and I think you make an excellent point there, Troy, as most people think of that check that comes from the death benefit claim enough to just pay everything off and then be good. But what we have to do is replace the income as well for a period of time, because we got to get through the grieving, the healing, to where we're back to work. Maybe the spouse is not working at that time, and now all of a sudden they have to go back into the workforce and all. So I would say in most cases, you better prepare for probably 2 years of income replacement minimum. Would you agree?
A lot of people are going to say, I want the income forever. I want it as long as I can have. But then as the agent, you can say, well, realistically, what do you think? Would 10 years provide you enough buffer if you had that income coming in for 10 years to get your feet on the ground?
Sure, absolutely.
So then you take your monthly expenses times 12 times 10, you take their income times 10, you add up all the other factors of the DIMEE that you just did. And a lot of times when you say, how much life insurance do you need? People come to you with, I need 200,000.
Right.
Why? Because my neighbor has 200,000. But when you do DIMEE, it might be 1.2 million if you're really going to find a solution for them. And then as your trusted advisor, your agent, then you're going to figure out how they can do that, whether they want it permanent, term, blended, and what type of policy best fits them.
I think the moral of the story is, Troy, and you're hitting a highlight here, is that the vast majority of people out there are far underinsured. They're not nearly prepared for either the inevitable as well as the unexpected if it were to come along to properly protect their family. Is that a fair statement?
That is. Remember, DIMEE. Use it, utilize it, let it help you build your business and put more money in your pocket. If you like this video, make sure to share it with somebody else.